So I think we're hitting critical mass for attendees. So let's make a start. So we're really excited to have you here with us as we dive into the critical updates and insights that will help you and your clients navigate the changes in compliance, taxation, and digital transformation as we move towards 2025. I'm Chris Downing from Sage, accountant by trade, and I'll be guiding you through today's session. We're joined by two fantastic guest speakers, Samantha Mitchum, an experienced accountant from SJCM Accountancy, and Natasha Everard, founder of Bewitching Bookkeeping. They bring a wealth of hands-on expertise and insights that we're excited to share with you. So during today's agenda, we'll be covering essential topics, including updates from the recent autumn budget and their implications for your clients, strategies for effective client communication and resource management during this busy self-assessment period, plus practical guidance on making tax digital for income tax. Yes, it's happening, and therefore it's really important to understand what you can do now to be ready. So we know this time of year can be particularly demanding. So our goal is to equip you with the insights, best practices, and tools that can make these transitions to a smoother practice for your clients going forward. So before we get started, let's just go through a little bit of housekeeping points. Your microphones are obviously muted to avoid any background noise. And if you have any questions during the session, please use the Q&A button to the right-hand side. We'll have time towards the end of the webinar to deal with hopefully anything which comes through the inbox, but we'll do our best to answer your queries. Plus also we'll be sharing some resources afterwards, particularly including this slide deck as well. So please just sit back, listen, enjoy, ask any question you like as we enjoy the next topic of getting ready for compliance milestones in 2025. So as I said, my name is Chris Downing from Sage, but we're joined here by Samantha Mitchum as well as Natasha Everard. Sam, could you sort of quickly introduce yourself and your background as well, please?
Yeah, certainly. Thank you, Chris. Great introduction there, and good afternoon, everyone. So my name's Sam Mitchum, and having worked in practice for many, many years, I set up my own practice, SJCM Accountancy, back in 2019. We're now up to 200 plus clients, and myself and 3 staff members.
Brilliant. And you, Natasha, please?
Hi everybody. I have been in the industry since I was 18, so 30 years now. I've been a bookkeeper in various different formats and all the way up to financial controller. I started my business a few years ago when I no longer wanted to work for anybody else. I hated the fact I was working for everybody else. So I am very proud a sole practitioner bookkeeper that kind of does everything on my own.
Yeah, and really, I think this is why it's so important to have you two on the call, because when we consider it, 80% of the profession, and we talk about the accounting and bookkeeping profession, are literally just sole practitioners, people by themselves with maybe just 1 or 2 staff. And really, it's a case of when you think about the clients which you're supporting and the workload you've got, it's actually bringing your insights and reality to actually help us be a little bit more efficient and also help the technology providers deliver the right tools. So let's kick off with the autumn budget update. Now, what is it? Just over 2 weeks since the budget announcement, and therefore it's really important we sort of, let's say, go a little bit deeper into the details, because let's be honest, you've all read the announcements, you've probably watched a series of webinars, and there's really no point me going spending a whole hour on the subject, but really just going through some of the key themes before we ask Sam and Natasha for their input as well. So let's just kick off with corporation tax and capital allowances. So for starters, the rate remains stable, and it's fixed at 25% for companies with profits over £250,000, while for smaller companies with profits of less than £50,000, it's still at 19%, with marginal relief in between. So these rates are set for the duration of this parliament, providing really quite a nice consistency for business planning. And then when we think about capital allowances, well, the focus is maintaining existing provisions. So the annual investment allowance remains at £1 million. So this is flexible for covering new and second-hand assets acquired and applies to both income tax and corporation tax, as well as full expensing continues for limited companies offering 100% for first-year allowances on new qualifying main pool assets, but still excludes cars and leased assets as well. There's also a notable extension to electric vehicles as well. So 100% first-year allowance for new and ex-demonstrators, as long as well EV charging infrastructure. So this has now been extended to March 2026. So this again offers a great incentive for businesses adopting greener practices. So really looking ahead, HMRC is committed to updating its guidance on capital allowances to clarify rules and supported businesses. So there will be some more announcements, probably in the detail coming forward. But also they're going to be announcing more consultation on terms of tax clearance processes as well as major projects. So allowing investors to gain certainty on tax treatments before committing to larger projects. So really, though the changes have been really largely unchanged, they actually provide quite a bit of stability, plus also clear opportunities for sort of tax efficient planning for your businesses who are operating through a limited company. So now let's look at national minimum wage as well as employers' national insurance. Well, this has created probably much of the conversation over the last couple of weeks. So in headlines from April next year, the main national minimum wage for rate workers, for workers aged 21 and over, will increase significantly. This rise is part of the government's effort to maintain wage growth above inflation. But also, more importantly, the national minimum wage for 18 and 20-year-olds will be phased out at some point. So this means that workers aged 18 and over will be eligible for the full adult rate at some point in the future, which again will sort of change the dynamics in terms of how employers may perceive maybe 18 and 20-year-olds, and also that expectation in terms of, should I actually just employ people who are older who may have more experience? So now moving towards, let's say, employers' national insurance, from April 25, the employers' national insurance rate will increase from 13.8% to 15%. This change represents an additional burden for employers, particularly those with a large workforce and high payroll costs. Then we have the secondary threshold for employers' national insurance, which currently stands at £9,100, and this will be lowered to £5,000. This means that employers employers will start paying national insurance on employee earnings over the £5,000 threshold. So this is certainly significantly in widening the gap of those who will be paying employers' national insurance on their employees. So this allowance is going to be having a massive impact in terms of how employers and how much they will be paying for their total NIC bill. So really, where you have small and medium-sized businesses with low payroll costs, they will probably benefit from the increased employment allowance. But those businesses who have a high proportion of maybe part-time employees, those who in, let's say, hospitality, care homes and nurseries, will probably face quite a significant increase in costs. And also those businesses who have maybe over 50% of their income sourced from local authorities or government sources, such as doctors and GPs and dentists, as well as, let's say, nurseries, they'll have an impact because their income is going to stay the same, but their costs are going to be increasing. So this has created an awful lot of, let's say, conversations in the last couple of weeks, and also involves an awful lot of business planning going forward for next year. So let's think about income tax and personal allowances. Well, these are really maintained pretty stable for the last couple of years, which really means with fiscal drag, more and more people will be pushed into the higher rate tax brackets as wages rise, effectively increasing the tax collected through changing rates. Higher income benefit charge, the consultation which we were going to have in terms of household income will now no longer exist. But however, starting from next April, employees will be able to opt in to pay the charge via their tax code, rather than, let's say, having to go through, let's say, a personal tax return and paying all towards the end of the year. When it comes to employers' national insurance contributions, the changes in NI structure will coincide with other income tax adjustments. So the lower earnings limit on pension credits is expected to align with inflation, ensuring that employers continue to earn credits towards their state pension, even as the thresholds change. So really, the long-term impact is that the ongoing freeze of personal allowances and income tax thresholds is expected to generate significant additional revenue for the government through fiscal drag, as taxpayers are gradually pulled into the higher rates of brackets over time. So really, even though the core rates remain the same, the extended freeze on thresholds will actually have an impact in terms of what people take home over time. Then let's think about benefits in kind. Well, the key thing is the fact that the governments are continuing with their plans that from April 2026, most benefits kinds will need to be payrolled rather than doing a P11D at the year end, meaning that they'll be added directly to the employee's taxable income and taxed in real time through payroll. This shift from the current voluntary system will increase the administrative burden for both employers as well as accountants and bookkeepers delivering payroll bureau for their clients. HMRC will provide more detailed requirements for this process sometime during the summer of 2025. So though we know it's happening, we still don't know the detail, which is going to put an increased burden in terms of the software providers like ourselves. But don't worry, we've already performed an awful lot of planning in terms of what this could look like, but obviously we're waiting for the detail. But again, it's a case of having those conversations with clients and making sure that they're aware there will be changes coming in from April 26. When it comes to electric vehicles, there's still a low benefit in kind rate on electric vehicles, and this will still remain favourable, but there will be a gradual increase over the next couple of years at about 2% per year after 2028, therefore reaching a 9% benefit in kind for 29-30. So again, there's still an encouragement of using EV vehicles, but obviously the cost of these for the employer will start to increase over time. So beginning of this year, when we had the previous government, there was a bit of a U-turn on double cab pickups. So there was the announcement that these would be treated as vehicles. Then a couple of days later, that legislation was pulled. However, this government has actually brought into place that double cab pickups will be taxed as if they were a car. Now, in terms of the classification and the allowances, there will be transitional rules. Therefore, any double cab pickups which are owned now or actually purchased or ordered by, let's say, April 25 next year, the treatment will be the same as they are, but there'll be transition rules in terms of their disposals. But it's really important to think about the fact that you'll have maybe a lot of clients thinking about how they can acquire these vehicles before the next tax year. So what's the government's direction on these changes? Well, there's still a focus on carbon emissions, encouraging people to buy EV vehicles through their business if they choose to do so. But clearly, there's going to be an awful lot of change in terms of how benefits and kinds will be treated over the next couple of years. So then let's look at capital gains tax. Well, there was a bit of a shocker. There was an imminent and instantaneous change from, let's say, the basic rate band from 10% to 18% on the day of the budget, as well as, let's say, an increase from 20% to 24% for the higher rate band. This is going to create a little bit of challenges when it comes to the tax returns for next year, because you're almost going to have to maintain a manual schedule in terms of what the disposals and the rates. And because there'll be no actual capability of doing that in the HMRC portal, the software providers will have to enable you to do a manual adjustment within the software. This isn't great, and there hasn't been a precedent for this in the past. So clearly we can have a few challenges next year, and also make sure you're doing those manual calculations on the side. There are an awful lot of changes in terms of agricultural property relief, hence an awful lot of social media furore around farmers and maybe inheritance tax, something which we'll touch upon in a moment, as well as there's been some changes in terms of how properties of trust will be taxed over time. So Sam, Natasha, well, that was what happened 2 weeks ago. What's the reality of the conversations you've had today? What's been the main themes of conversation? And also, more importantly, how did you share these insights with your clients? Natasha, shall I start with you in terms of what's top of mind with you?
I think it's the payroll. The payroll has really affected a lot of my small businesses. A lot of them are seasonal businesses as well, because obviously I live near the coast, and this is going to be a major impact on their businesses. So the way I've done it is I've looked at each of my clients individually and shown what the costs are now and what the future costs are on what we've already experienced this year. And the way that I've had to educate them it's no good on paper. I've had to pick up the phone, talk to them, and talk it face to face, because they all got their own concerns. It's such a really big impact for seasonal businesses with this kind of changes, the fact that they are going to have a lot more cost than they normally have. And if the weather affects them, then they are basically need to start planning now. So we've put into place things that will help them go forward, and working more with cash flow. So we're really looking at cash flow at the moment and how that's going to affect it. And there's some great kind of little spreadsheets and little software that I use to actually help my clients. They can visually see the impact. They can visually see where they are spending on something else, maybe they can reduce that. And because they're very thoughtful about how their employees are going to feel as well if they're having to lay them off. And that's the main concern, is they don't want to upset anybody. And unfortunately, the government have put them in a no-win situation at the moment.
Yeah, and also when you think about the business trades and the types, so those in the hospitality sector, those with a lot of part-time workers, their costs are increasing quite quickly and significantly, which means business planning, ensuring your clients are up to date on their daily bookkeeping, weekly bookkeeping, to understand where they may be at the end of next year. So I think next year we're going to see even more, let's say, engagement between clients, accountants and bookkeepers, try and give that sort of confidence in terms of what their trading position is going to be, but also reviewing, let's say, other costs and overheads and seeing where they can save some money.
Yep.
Sam, from your point of view, what were the headline themes, and what's your focus for next year once maybe February's gone and by and you can start to provide some more advice and guidance into 2025?
Yeah, absolutely. So similar to Natasha in that we act for a lot of small businesses, be it not so many seasonal, but certainly we have like cohorts of clients in certain sectors that will be hit very hard by this. So again, I think national minimum wage changes alongside the changes to national insurance is certainly the kind of topic of conversation within the client base. I know you asked before, Chris, like how we've communicated this with clients. I always do kind of a table whenever there's a budget and put it out on social media, that I'm trying to highlight the areas that were key for my client base. Obviously my social media is there for my client base predominantly, and I must say there was a lot to pack in this time. You know, you've summarized it very well in a few slides there, but there really was a lot of conversation. I think certainly the national minimum wage and national insurance has the most worrying, or should I say the most concerning factors for our client base. But there are other elements that do have huge factors as well. We do quite a bit of capital gains tax work within the practice, and obviously the fact that CGT, there you go, it's changed from today, you know, no pre-warning as such. Yeah, a lot of media hype, but we can never plan properly just based on, you know, speculation before the budget. So actually there was some conversations that had to happen very quickly with clients that, you know, they might have had a transaction halfway through, so now they were panicking, oh well, which date does it depend on, you know, is it the completion date, is it the so there were a few conversations like that. I think you know, alongside what Natasha said, really the cash flow is now kind of more important than ever. It's definitely a time to pick up the phone and have real life conversations with clients. And I think that is the key here. As much as we try our best to summarize budget announcements and we try our best to come up with ways to communicate with clients that put kind of the real impact onto paper for them, I feel like we haven't had a budget for quite some time that's been very specific client by client for various reasons. Exactly what you were saying, Chris, let's take a client in hospitality, for example. They generally will have a lot of part-time young workers. How is the budget affecting them? Well, you know, massively, as you were saying before. So I think it definitely is a client by client basis, and actually once the January rush is out the way, what do we need to do? Well, we need to have those check-in points with the whole client base, really.
Yeah, and also with the increase in national minimum wage, it's not just, let's say, people will be paid more and there'll be more employers' national insurance. That's also got an implication in terms of the employers' pension contributions as well. So again, understanding the details is particularly important. I think it's wise to maybe sort of deal with a few questions as they come through, but I think the themes are aligned. So there's a good question here. Has the eligibility for employment allowance remained the same? Well, the eligibility has effectively remained the same, but it's important to understand the detail. So clearly, limited companies with a sole director, they are not able to actually get the employment allowance. The allowance has been increased to £100,000. I believe that those businesses who are local authority or government funded aren't eligible for it. But also, really more importantly, it's in understanding maybe the associated company rules. So therefore, it's a case of thinking about, let's say, if you've got associated companies, where the people are employed, and also the eligibility of that. So I can imagine there could be some employment planning in making sure that everyone is employed in a single company. Sam, is there anything else you think we should expand upon there?
I think it's just one of those kind of the devil's in the detail. There's certainly with the associated companies, and because of the recent corporation tax changes, we will have, you know, most of us will have been looking at associated company rules anyway, and the the rules that are there for the employment allowance are very similar, if not pretty much the same as the associated company rules for corporation tax purposes. So I think it's more important than ever to understand your client base in the way of which company is linked to which company, how are they linked, and really kind of drill down on the detail of shareholdings, commercial interdependence and things like that. Without getting too technical, that is kind of what we need to be focusing on, just having that overall understanding. Apart from employment allowance, until the recent CT changes, it's been a long time since we've had to kind of really look at associated companies. I know we've had fun in the office kind of getting our heads round, you know, well, is that company associated with that one? So I think, yeah, but in terms of employment allowance, Chris, as you said, there hasn't been much changes apart from the cap of, you know, who can claim, but certainly still not available for the single director companies, which I think is something that does impact quite a lot of, you know, any small accountancy's client base.
Yeah, and typically I think smaller businesses, they're not going to be affected by, they're going to not say benefit, they're going to be no worse off apart from actually where they have people who were at the national minimum wage rate, they're going to have to pay more to their employees. But I think it rounds out to me, if you've got 5 or 6 employees, you're not going to be paying any more employers' national insurance. And that's the sort of rule. So really this is affecting those businesses with more than 6 employees. But again, the devil's in the details sometimes, isn't it?
Yeah, absolutely. And there is a sweet spot there. If you kind of generalize on salary rates, where you can say, you know, roughly speaking, if you had X amount of full-time employees on around 5% more than minimum wage, then yeah, it's not a huge impact. But then obviously businesses vary so much from business type to business type in terms of part-time staff, or, you know, you might have one highly paid staff member and the rest on minimum wage and things like that. So it has been very hard to summarize what the true impact is without looking at every client individually.
Yeah, well, Paul's been busy on the Q&A. He's asked another question, and I think this comes down to the grey area in terms of what's possible, because with a sole company director, they could potentially employ one of their adult children to basically get the employer's allowance. I suspect, like everything, the government didn't quite think about that. And it'll be interesting in terms of there's some maybe potential anti-forestalling rules come into place, but I doubt that's going to come in this year at all. But again, it's one to monitor, think about. There are rules which you could probably work around, but that's not for us to dictate. It comes down to making sure that if people or businesses are employing people, that they're employed for work done, and also making sure they're maintaining the sort of national minimum wage rates as well. Have you heard anything about that, Sam, at all in the press?
Yeah, I think there are always kind of the typical ways, aren't there? And like you say, Chris, I think for various reasons now, some people are pulling away from, or not pulling away from, but as well as having a you know, a spouse that might do a bit of admin or whatever on the payroll, adult children on payroll, you know, children that are at university that might dip in and out and help business, but also have a full personal allowance to use up. But again, I think client by client basis really, because you do have to be, you know, when you're looking at associated company rules, again, you have to be careful with the interdependence there.
So I think that's the budget for now. But really, when you think about the budget is at least we're only going to have one fiscal event per annum now. Well, that's what we've been told. So there'll probably be some little tweaks in March, but at least we'll have a bit of consistency in planning. But when we actually think about our lives as accountants and bookkeepers, the year actually can be a little bit seasonal. Yes, we've got VAT returns to create, but actually when you come to self-assessment period, that peak of work and anxiety and collecting and chasing records is all around that October, November, December and January period. But then also it's eking into February because of the 7th of February VAT return deadline. But when you think about our ambitions, it's a case of, yes, we want to be as profitable as possible. We want to make more money. If you're employing people, you want to think about their time and our time. We want to be really efficient when using the tools that we've got. But also we're seeing the fact that clients' expectations are increasing. So they're always thinking about how we add value. Now we're going to be talking about making tax digital at some moment, but this is my prediction of the future. When we think about dipping into 2026, we would have actually dealt with self-assessment in January 2026, and we'll be straight on making sure we're ready for MTD. And when you think about those peaks of the VAT returns will now coincide with MTD updates as well. So that workload will be increasing. So it's a case of, yes, there'll be budget changes, but really at the end of the day, it's a case of how can we mitigate these challenges and think about how we can, let's say, use the next 12 months to actually refine our processes. But when we think about refining our processes, sometimes it's really just about how effective are we with client communications, engagements, trying to get clients to work the way in which we wish to work. And what I would like to do is really unpack what Natasha and Sam are doing within their practices, because obviously being sole practitioners, and Sam, I know you've got a couple of employees to actually do majority of the work, but still it's that whole, let's say, traffic of communications, engaging with your staff, engaging with clients, chasing clients for information, but it's also they're just dealing with those queries on a day-to-day basis. So Natasha, not only do you have a book which helps bookkeepers in terms of managing that workload, what sort of insights are you bringing to the table in terms of what's been working well recently, and what are you going to be doing next year to sort of maintain that sort of sense of calm within your practice?
I think the key point is making sure that you have the communication channels open, that clients can get to you and you can get to them, and to take away the fear factor. There's loads and loads of social media, loads of press at the moment about MTD. They're confused by it. They don't know how it will impact them. So it's getting that information. But I think on my side of things, I've been really working on getting the paperwork in a timely manner, and to say to them, the more paperwork that I get quicker, the more real-time figures that they will get. And it's kind of like bringing them into the process of everything. They feel like they're part of the process. So it's automating reminders for them for deadlines, from automating reminders that I want paperwork. It's being on time with chasing them for missing paperwork as well, and sharing the importance of why we need that piece of paper to that transaction, and that Mr. HMRC would love you to have that piece of paper to correspond with that one. And it will actually take the pressure off them, rather than them coming at the year end where they're trying to find everything and you get this shoebox, and nobody likes a shoebox anymore. We always like to have it on time. And I think for me, the whole thing is now is to express that value, because obviously this time next year, we're not going to be in this kind of situation where it's going to get to chaos if we don't actually start putting these things in place, things that we can scale up rather simply, and have systems and communication channels really effectively working now, and the software that matches that as well. You've got to have the right software that meets these needs as well, and that they're fine-tuned. So bank rules, templates, that they seamlessly work whichever software you're going to send it to. These are the things that you need to get in place now, before I would say March next year, so that you can then scale it out.
So Natasha, I've been in the profession for 25 years and you've been there a little bit longer than me, but clearly it's a case of you've seen huge changes in technology, haven't you, and how you're applying that technology with your clients, but also the fact that you're probably managing more clients than you have ever done before. Yep. From maybe 5, 10, 15, 20 years ago, because the technology enables you to do more, generates more income yourself. But actually, what are the priorities? Do you want to have less clients, or clients who pay you more because you're delivering more services? Or actually, do you see a future once we've got over MTD and there's a little bit more automation, whether that's delivered by artificial intelligence or the right rules in place, or actually clients doing a little bit more? Where do you see your practice going? Obviously, it's grown in terms of client numbers, but do you want less, or do you see the opportunity for taking more on?
I see there's a great opportunity, because some practices aren't way ahead in technology like we are at the moment. We're very proactive. We look at solutions to find our clients' problems. I think there is a balance where you can actually have more time to take on more clients, but you also have more time to spend time with your clients with the right kind of information. The conversations, years ago, you just get piles and piles of paperwork. You'd have to manually enter them in. You then would have to do manual bank reconciliations, things like that. Having these advances in technology and the services that we do now give us more time to take on more clients, but more importantly, have those conversations, have their future plans, have their concerns addressed, and also have time for yourself. You didn't start the business to actively work with your clients, although you actually set up your business for yourself as well. So it's also very important with these advances that we actually make time for ourselves.
Yeah, and I think that work-life balance is particularly important as a focus. So Sam, if I come to you about work and possibly another new life, your 31st of January deadline is somewhat shortened, isn't it? So it's a case of how have you changed this year compared to previous years? And for those who don't know, you're expecting your second child mid-January. So this is where 31st of January deadline has changed completely.
It has indeed. It's changed to 31st of December in my practice. We're all pretending that's the tax return deadline, or as much as possible by then anyway. And I think, if anything, having my second child 1 week before the tax return deadline has forced me to really take a step back and look at the things that needed to happen within the practice quite a long time ago. I'm now being left with no choice but to sort out, and that all comes down to planning. It all comes down to workflow management, but also how the team are working, how the team are talking to each other, and trying to take that step back from the business myself. We all see, I think social media puts a lot of stories in front of us where people kind of set up to remove themselves as quickly as possible. And I think, Chris, you've got two individuals here who have never aimed for that. Like Natasha and I know from previous conversation, neither of us have ever set up in business so that we could then step back from business and watch it run itself. Like, we want to be in there ourselves, getting our hands dirty, if you like, helping clients to move forward with their lives and their businesses. But what the kind of pressure is doing to me now, whereby I do need to get a lot sorted by kind of December / mid-January, it's bringing out the highlighted kind of points that have needed dealing with for a long time anyway. And I think things like MTD being forced upon us as accountants is one of the most, definitely one of the biggest changes in the way we work since I started in this career. But I think we have to try and stay positive and see that as an opportunity. And I think that is the key here. Like, this is our opportunity to work not necessarily differently with clients, but in a more supportive, close, connected way with clients, because we're going to be forced to have regular check-in points, even with the smaller businesses.
Now, I think life has obviously evolved over the last couple of years, especially post-COVID, in terms of how clients perceive their accountable bookkeeper, plus that interaction, but also technology, it's gone beyond email, it's that WhatsApp theme in terms of I want a response now. And I think this is the key thing, it's actually, again, personal well-being, building in those buffers in terms of communication. It's the fact that you can have lots of messages. There's almost like client expectation. They expect a response tomorrow. Almost call it the Amazon culture. There's a set delivery. You can get it instantaneously. So how has that evolved? How has that changed? And also, what are you doing to try and sort of mitigate that anxiety of constant contact and almost needed to be seen to be available to your clients? Natasha, I'll go with you first, if I may.
I think for me, it's about setting realistic boundaries and expectations for clients for communication. So I only really accept two kind of, three channels of communications. That's phone, email, or WhatsApp. I don't tend to do anything else because, no offense, I get overwhelmed with it as well. And the clients want a prompt response. So for me, it's having those realistic deadlines of when you respond to clients as well. And it's done that from the outset of when I actually take a client on. And I think that's the way we go forward. Obviously, as we are taking on more clients and MTD is going to be full pelt, we may have to look at those boundaries and those deadlines a little bit differently, because obviously, like you say, it's going to coincide with VAT returns, and a lot of us do VAT returns as well. So it's going to cause quite a few chasings more for paperwork, chasing more for deadlines, rather than just saying one deadline a year. Like I've always said, September is my deadline for the self-assessment. Is now going to be like every week. What have you done last week? Can I have that paperwork now? So the communication channels, I think, is something that needs to be evaluated next year, but what I'm happy with as well. So I'm not over bombarded with it. Yeah, we have to perform a service, but we don't want to actually feel overwhelmed ourselves.
And Sam, you were once trading just by yourself, and therefore all communications were going through your WhatsApp. You were, let's say, the point of success for your clients as well as failure if you can answer them quickly. So how have you been able to, let's say, transition from you being the point of contact to your new employees being, let's say, taking a more, let's say, proactive role in terms of client engagement, and therefore you can actually, let's say, focus on running the business, dealing with queries and taking on new clients as you wish to do so?
Yeah, see, it's always a tricky one when you've got an established client base, certainly as a sole practitioner, when you then introduce staff, because they're so used to dealing with you. I know my first staff member that I took on was kind of bookkeeping / admin, and she was doing fantastic work in the background from day one, but a lot of it was in the background. So even then, the clients didn't necessarily realise that there was anyone other than me. It was me that they wanted to speak to because it's me that they saw on social media, and it's me that they've bought into in the first place with becoming a client. So that has been a huge challenge, and I've made many mistakes, which I often talk about online for the reason of I'm trying to educate and help others that, you know, a lot of the mistakes I made in hindsight could have been avoided. But I think when you are running a small practice that actually values itself on that personal touch with clients, the fact that clients can come in and have a coffee and it's not all really automated. You know, the software's there doing its thing, which is fantastic, but all that does is open the door for us to build that relationship with clients. But in answer to your question, it's then quite hard to break away from that and say, we now have this staff member that's handling your accounts. A lot of it comes down to trust, and trust takes time, like in any relationship. And once you introduce a staff member to a client, it does take a little bit of time, but then eventually they will stop contacting me. I need my clients to know what I know, which is actually the staff have more time. They sometimes have more knowledge about certain subjects. They're not, you know, I'm not the expert in everything. I have staff members purposefully who are a lot better at certain things than I am. So I think it's all about teaching kind of that trust element, or showing the clients that that trust element can still be there. When new clients come on board, much easier, because what I do now, even though it is usually me, or 9 times out of 10 definitely me that they'll speak to first, I always name drop the staff. So straight away they'll be told, you know, Anna will get in touch to do with your AML, and she'll be in touch asking for copies of ID, and then Carl will be the account manager that's in charge of your accounts, or however that looks. I always name drop in the first meeting so that it's not a shock to them that actually I'm not doing everything for every single client in the practice.
Yeah, brilliant advice. And I think that's the whole point, is that on day one, basically setting expectation and who is dealing with what. Now, we've had a couple of questions coming in about making tax digital, but we'll deal with those after we've done the little MTD section, which is now. So one of the other key themes from the budget was actually the confirmation that making tax digital for income tax, it's no longer ITSA, income tax self-assessment, now just income tax, will be happening from April 2026. So those with those sole traders and landlords with total gross income of more than £50,000 will be coming in on the first wave, and those with, let's say, more than £30,000 from April 2027, as well as the additional new element is the fact that those with income of more than £20,000 will be coming into MTD by the end of this Parliament. So not saying that'll be 28, but probably maybe around 29, effectively allowing the dust to settle on making tax digital. So the key things is the fact that the qualifying income will be the combined income from your sole trades or your client's sole trades, as well as any property income. And also it's the share of the property income if you have joint property ownership. But also the key thing is that partnerships are now out of scope of making tax digital. Yes, you probably had the fun and games of basis period reform with your partnerships, but thankfully they are not involved in making tax digital. So at least you can park those to one side. So really, it's really important to be thinking about the fact that understanding the detail of making tax digital. Now, thankfully, we have a fantastic website dedicated to MTD. We've got a handbook as well as a really nice, let's say, succinct webinar, which you can watch at your own, let's say, time frame. So just go to the website. Well, I'll put a link towards the end. We'll go into more details on making tax digital, what the legislation means, who is affected, how they're affected, what is an update. And I think this is a key thing, is that we've been talking about quarterly updates. This isn't a return, this isn't a submission. There's no legal responsibility in terms of accuracy, as well as the submissions will be cumulative. I know that as accounts and bookkeepers, this is a really big step change, because really anything which we share with HMRC We tick, bash, double check, get agreement from clients. And this is where maybe what HMRC's perception to actually what our quality of work we deliver is going to have to try and meet in the middle. But again, it's really important to understand the detail as well as how to get ready and the planning, of which we have a whole webinar series to deal with that. But really the focus of this is the fact that MTD is happening, but also more importantly, what do we need to do to actually get ready? So the reality check is the 7th of August, no longer the 5th of August, because the other key thing is the fact that the deadlines are now aligning with the VAT date deadline. We're going to have that big bang on the 7th of August 2026, when you have the first cohort all filing by that deadline. So when you think about reality, it's taking a step back and being ready for April 2026. We have literally just over 350 working days. Let that settle in. Because if you're an accountant by yourself, you may have, what, 100, 150 clients, 40 of them maybe limited companies, maybe 50, 60 sole traders or landlords. So even the best part of the world, you're thinking about how do I actually sort out one of my clients on a weekly basis or from now until MTD and fit in everything else that we've got in life. Now, those larger practices, it's going to be even more challenging. So this is why it's so important to have a plan in place. And really that plan is just keeping things really, really simple. Let's start with landlords. Landlords don't see themselves as businesses, but also HMRC are still, let's say, allowing the ink to dry in terms of what they expect landlords to do. There's been a lot of discussion in terms of how we deal with, let's say, multiple property ownership, multiple sources of income around landlords, because it is very, very complicated. And HMRC will be sharing more information on this. And therefore, when you think about how the landlords operate, it's probably worthwhile just parting them to the end. They're the last ones you're going to be working with. But rest assured, Sage will help to support with landlords as and when we understand the detail of what that means. But then think about those sole traders. Who should we work with first? Who's going to get the most value? And also the value is from you as being the accountant or bookkeeper. So clearly, client segmentation, think about your sole traders, any sole traders for which you're reporting not only the P&L as well as sorting out the balance sheet. Really, they should be on a bookkeeping tool sooner rather than later. Because really, when it comes to the year-end accounts compliance, things will be easier. Then really think about those sole traders, which is just income and expenditure, putting them into one pot and then dealing with those as well accordingly. So really, when it comes to making tax digital, it's the key themes. Start to accelerate your plan. Up until 2 weeks ago, you probably thought it would be deferred again. But I've been sat on so many HMRC meetings. I was in an all-day meeting even just on Wednesday, and I've never seen such a marked change in terms of their approach, the detail of what they're doing, plus also how advanced their plans are. And really, like the software providers, we have the tools, we've connected to their APIs. It's all about pressure testing the system with people to come into the beta. But also more importantly, they understand in terms of some of the challenges which you're facing, and therefore themes like multiple agents will be available very, very soon. So really, you need to accelerate your plan. And the plan has got to be communication, and communication regularly and often. I don't think it'll be a stretch of the imagination that when we come to February and March next year, HMRC will probably be communicating to your clients because they have just had, let's say, the tax return submission data. They'll know those businesses or those sole traders and landlords who will certainly be with more than £50,000 of income and just be giving newsletters telling that MTD is happening. So be ready to be proactive with that course of action. Client segmentation is key, and client segmentation is all about, yes, understanding where they are, what they're doing, nature of income, but also those other little nuances. Do they have a separate bank account? A separate bank account has got to be the way forward, rather than having multiple bank accounts and making your life as easy as possible. Then also thinking about those other clients who won't be affected. So even though limited companies aren't part of MTD, they're part of your MTD plan. If you've got limited companies which aren't using bookkeeping tools, who aren't using, let's say, auto entry for receipt capture, who aren't, let's say, thinking about how they can be working with you better, how can they work with you better? So every client is actually part of your MTD plan. But also it's the opportunity to review, let's say, how you perform your work, what tools you're using. Are you using practice management tools today? How are you communicating with your clients? Are you using auto entry as much as you can? Are you using bank feeds across all your clients who are using a ledger? But also more importantly, think about getting support. People like Natasha, you're all by yourself. You're up on terms of the themes of what MTD is all about, but obviously you'll still be seeking support, won't you? And even Sam, she's got a small team behind her. Getting support is really key, and support comes in not only, let's say, the software providers, but also your peers as well, because really this is where accountants and bookkeepers come in terms of actually helping support the whole profession itself. But the key thing has got to be creating time as well as capacity. As I've shown by that little wiggly line on the previous slides, it's going to get busy in 2026. So actually carving out time and having a new way of work going forward is really, really important. So what's the impact on your practice and what should you be doing? Well, MTD is really just part of your normal, not say normal, it is the transformational plan for your practice. It's your long-term plan. Where do you want to be in 3 or 4 years' time when and if MTD's dust actually settles? So client segmentation is key. A lot of practices are still using Excel spreadsheets to run their practice. Thankfully, Sage provides client management free of charge. So you can have all your clients in one place, segmentate them, provide attributes, as well as, let's say, order categorization, as well as we allow you to click into Xero and QuickBooks if you have those ledgers on your practices, just to make your lives a little bit easier. So drive awareness is key. So you're going to probably have more conversations than ever over the next couple of months because of self-assessment. So drop in Making Tax Digital at every opportunity. But also it's a case of how do you, let's say, nurture better behaviors as well as new habits, but also think about your product decisions as well. Because Making Tax Digital isn't just about bookkeeping, it's about bookkeeping with the nuances of detail. Because unlike limited companies where it's just, let's say, categorizing transactions to a normal code, with sole traders, it's the fact that you'll need to be able to bring specific disallowable elements on a percentage or fixed line basis. You're thinking about that collaboration, those mobile tools, as well as browser-based tools. And this is where I'm really proud in terms of actually how Sage has actually dealt with MTD. We've built a brand new tool called Sage Individual, which deals with all the details of MTD, as well as enables you to work with your clients in a more effective manner. But also it's the fact that what are you aiming to deliver? Unfortunately, or fortunately, this is an opportunity because you will have to review, reprice, and re-engage all your clients by April 2026. Yes, you'll have, let's say, new changes in payroll and benefits in kind that bring new risks and opportunities, but also it's a time to reset the balance because when you think about 2026, that summer, you'll be dealing with self-assessment for 25-26, but also doing 2 quarterly returns. So you'll be doing effectively twice as much work in 1 year and your clients will be billed twice as much. So it's really important your clients understand what MTD means and also what their involvement's going to be. It's an opportunity to actually think about what clients you want. Also an opportunity to grow your client base because 30% of sole traders, amazingly, do not work with an agent. They're doing their own tax returns. And I can guarantee you, like we saw with MTD for VAT, businesses who are doing their own returns will suddenly realize, oh, this is a bit more tricky. This is a bit more difficult. I need some help and guidance. So if you want to take on more clients, there'll be hundreds of thousands of them knocking on the doors of accountants and bookkeepers for the very first time, probably around the 7th of August, 2026, hopefully not, but a little bit sooner rather than that. But also it's thinking about how do you change your practice approach rather than working against deadlines, working well ahead of them. And it's all about thinking about the tools you've got, thinking about the tools your clients use, but also trying to create those new habits and behaviors with your clients. So therefore, what's the dream? Well, basically going back to those key priorities, how do you be more productive? How do you increase your performance? How do you maintain and increase your profitability? Obviously leveraging the value from digital tools, but also leveraging the value from generative AI. Again, this is where Sage with Sage Copilot is leading the technology profession in the finance area in terms of generative AI within the bookkeeping tools as well as your practice management tools. But also it's a case of working less and enjoying more of what you love doing more. And this is the key thing. And therefore, how do you change what you're doing over the next year or so? So when it comes from Sage, Sage has pretty much got everything covered. So whether it's client management, proposals and pricing, dealing with AML and KYC, we've got all those digital workflows within Sage for accountants. But also it's the fact that when it comes to bookkeeping, as well as payroll and HR, having that mobile experience, plus also that collaborative experience with your clients, but also when it's terms of, let's say, getting data into the system, whether it's purchase automation built within the bookkeeping tools or a separate workflow tool like auto entry enables you to take data from anything and push it into any general ledger you've got, but also complementary year-end accounts and taxation software for you to use in your practice, as well as supported by Sage Copilot. If you're not using Sage or all the tools for using Sage, I would welcome you and encourage you to work and understand what else we do. So with Sam and Natasha, with let's say a couple of minutes ago, 10 minutes ago, what are your MTD plans now that we know that it's happening? Natasha, shall I start with you? Actually, do you have many sole traders and landlords on your books who will be affected?
I have 10 sole traders and about 15 landlords, so they're going to be majorly affected. My idea, I've already been segregating them, so keeping them separately and making sure that I'm up to date with everything. My key thing is to educate them now about getting the information promptly. I think the whole thing for me is making sure we get all the paperwork, not just think what they think we need. So and like making sure, like you said, the bank accounts are business bank accounts, that they are separately, or it doesn't even have to be a business one, as long as it's separate, that all the transactions go through that. I've got that. For me, I also have accounts prep, and accounts prep has been a godsend recently because that has enabled me to take an Excel spreadsheet and sort of put it on steroids and make it really work for me. And that's what I tend to use for the smaller ones as well. It is just basically education, and if I can get the right, I've learned from mistakes like Sam does. I try things, and if they don't work, then I don't do it again. But you've got to try somewhere, and I want to aim to get a kind of really good system in place by March next year. That's my goal, so that I can roll it out going forward and enable to help other clients that probably wouldn't fit other practices. So that's my thing, is just communication and getting the data to me.
Sam, how about you? What are your priorities? Because I do know you have quite a lot of sole traders on your books, whether it's, let's say, construction workers, CIS, as well as any other trade, beauticians, you name it, you've probably got it. What are your priorities for the next 3 months? Or no, actually, you've got different priorities for the next couple of months, haven't you? But what's your priorities post-February and March?
Yeah, so again, all about communication, all about education. That client segmentation is the most important step, which we've done before, but MTD was delayed several times. So we need to revisit that because we will have taken on new clients. Certain clients may have dropped or increased in turnover, so where they sat last time we were planning for MTD might be different to now. Definitely taking a stepping stone approach. You still have time if you start now to take a very, very slow and controlled approach with clients, be that the main thing now is to open communication. Then we're looking at steps such as business bank accounts. We're introducing them to software, the ones that are not on software yet. And the way that I intend to do that is very much kind of a group offering, because I do act for a lot of sole traders. I'm lucky in that we can segment them into industry types. So the way I see it is that I'm planning to maybe do some in-person events for clients, maybe get Sage involved with that, because again, like anybody using Sage will know how helpful the account managers that we have are when it comes to educating clients. The other idea I've had is doing videos for clients, because one thing I can guarantee is that we are going to get the same questions, especially once HMRC start contacting our clients. We're going to get the same questions time and time and time again. And I think for me, video is a really powerful way of communicating with clients, because it's still quite personal for me to come on the screen and start talking about who's in and who's out of MTD, and when different businesses will be in, looking at those turnover levels, for example. If I can create a little short, snappy, sweet video that staff and myself can push out to anybody that's asking these queries, I feel like that's something then they can refer back to. Because the thing is with MTD and the way that we are seeing kind of the different criterias, is that just because a client falls into a certain category now doesn't mean they'll necessarily be in that certain category by April next year and April the year after. So I think to create something that not only your clients but also your staff can keep just referring back to, and I think for me video is where the power is, because they can pause and think, oh, does that capture my business or not? Mm-hmm. So that's kind of the plan internally, I think, of how we're going to communicate best with clients.
Brilliant. So we have 5 minutes to go. I have a lot of questions to deal with. So let's make the answers short and sweet. I'll push some to you Sam and Natasha, and I'll answer some myself. So the first one, Sam and Natasha, will you envisage putting your charges up with clients because of MTD? Yes or no? Or actually, is it going to be a change or actually a reset of it all? Natasha, you first.
Sorry.
I would say yes for me. I always struggle with price increases, but this one, because we are being more proactive for them, they're actually getting a better service because they're going to get more cash flow. That's what I'm thinking. I have to increase my prices because the service value is going to be a lot more valuable to them.
Yeah, it's a yes from me as well. I think it would be a missed opportunity if you didn't revisit your pricing structure at the point of MTD. I will be revisiting it, whether that will be a large hike or not. It probably gives me the opportunity to bring a lot of pricing in line, because I've still got that whole legacy client base that are on lower fees, and that's not how I want the practice to be. I want two builders to be able to bump into each other in the pub if they do, and discuss their bill with me and they'd be exactly the same. So I'm taking it as that opportunity to really bring the client base and the fees in line.
That's a really good bit of advice, because you've probably picked up clients over the years, have different rates for doing the same job, but also the price would have been like an all-in package. So they're just paying £100 a month, but actually life's moved on, you're doing more, or actually you didn't actually explain everything that you did do. And this is a once-in-a-lifetime opportunity to revisit and educate your clients exactly what an accountant or bookkeeper does, and therefore everyone will be doing this. Right, let's rattle through these. Will there be a specific department, or I'm just going to read these out and deal with them as I go along. Will there be a specific department or forum to access to trial and error and experiment with the well-advanced official? Basically, can you play? The answer is yes. We encourage you to participate in the beta. If you've got a client, you can actually use software, submit information and pull out. And I think this is where it's really important. And Sam is in the beta. So she's got a client, filing a quarterly update, understanding what the process looks like, and also understanding that it is literally press a button. Now, in terms of costs, I think there are two costs here. One, in terms of your professional fees of delivering the work, as well as the cost of software. Now, again, Sage is leading the way. So Sage has the most, let's say, cost-effective solution in the market. So Sage Individual, via an accountant or bookkeeper, costs only £4 a month. We also have a free version of the same solution with just a single bank feed and manual data capture. But for your £4 a month, it's multiple bank feeds and receipt capture built within the tool. So therefore, no one is for that. And also, well, those clients which are more complex, obviously you can get Sage accounting at £11 a month as well, and less. So we're basically the most cost affordable solutions available in the market. Have we resolved the issue with complex landlords? Well, that one, in terms of HMRC, will possibly be changing the guidance in terms of the complexities of what you need to do. But if you've got really complex landlords, the answer is Hammock. So if you've not seen it, have a look at it. But actually, we have a partnership with Hammock. So please reach out to your normal Sage contact who'll help support you in terms of getting the most cost-effective deal with that. But also, it's a case of within most cases, we'll be able to deal with landlords as well, certainly those simple ones. I have a client which is in a partnership with property and a cafe. Is the property income partnership count towards MTD? So depends what's on the tax return. So on your client's tax return, if they've got partnership income, that's out of scope of MTD. If they've got sole trade income, that's in MTD, assuming obviously it's more than £50,000 of income. And if the rental income is going down the SA 105, that will be within MTD. So it comes down to what is being declared at the moment on that, but at least partnerships are out of scope. So the partnership income is not part of MTD. That will go as a normal tax return process. And in terms of terminology, we've been using this word called final declaration for a couple of years. So final declaration's out the door. It's now called a tax return, and that's where you'll be supplemented with partnership income, interest, capital gains, etc. Do I need to keep both types of income separately on Sage? Well, actually, it's best practice, because at the end of the day, you want to keep those trades separately, be able to report upon them easily. And also, when it comes down to what's been reported on the SA 103 at the moment, if you've got separate SA 103s, keep them on separate ledgers. But obviously, because we've got really affordable software, it's going to be easier to keep them separate. Do you think there'll be some bridging solution for older clients? Well, really, when it comes down to what are your clients using? If your clients are using spreadsheets, spreadsheets are okay. Spreadsheets will need to be bridged. However, what you need to be thinking about is you're going to have to splice together 4 spreadsheets for your year-end accounts, as well as deal with, let's say, any errors. Now, Natasha mentioned something called Auto Entry Accounts Prep. That is a particularly cool product. It is probably the fastest way I've ever seen anyone or any tool produce a set of year-end accounts. So therefore, Google Auto Entry Accounts Prep, have a look at it, then come back to us and you'll see what I mean. Are trusts included as sole traders? No, trusts are excluded. Do we need special Sage software? No, all our Sage bookkeeping tools will be MTD compliant. Let me just think, anything else which comes through as a theme? No, we don't. And isn't that perfect timing? So we've come towards the end of the hour, and I just want to say thank you, Sam. Thank you, Natasha, for your insights, your personal experience, and your MTD plans. So really, for those who are still on the call, and we've got, wow, I didn't look at the numbers, literally hundreds and hundreds joined the webinar. What I would really encourage you to do is think about the tools and software you've got today. Think about the tools and software you need for in 18 months' time or 350 working days, but more importantly, get up to speed with making tax digital. And if you want any help or support, Sage is here to support you. So thank you for joining us today. Have a fantastic Friday and a fantastic weekend, and hopefully we'll see you soon. Thank you and goodbye.
Thank you.
Thank you.